Episode 49. Welcome back.
Yeah.
Keith, Lisa,
Yep.
how's everybody doing?
Good. I mean,
Good.
we have winter back in
Winter's
Minnesota.
back.
What?
Yeah.
We're in
Oh my
April.
god, the driving conditions yesterday was like January. It was like a storm and
That was
ugh.
April Fool's joke on us.
Yeah,
Yeah,
seriously.
it seems so.
Should be melted by today, though.
Yeah.
By the end of the
We
day.
shouldn't have snow.
Yeah.
Really. But
To begin with.
Yeah. Yesterday was April Fool's Day. Today is Liberation Day.
I love the sound of Liberation
Oh
Day.
my
Yeah.
god, this is a
what is
this
this?
Although,
is a
so
high stake week.
Doug Ford, the Ontario premier, called it Termination Day. So
Well, it's
it depends on how you want to look at it.
explain what Liberation Day is if people aren't haven't heard that
Liberation
term.
Day is Trump is now going to announce later today all of the tariffs on all of the countries
There
that
we
he's placing.
So what,
And he's calling it Liberation Day.
and what did
Liberation
call
from
it?
any imports, apparently.
in the premiere of Doug Ford? I caught that too. What do you call it?
Termination Day.
I thought that was kind of made me laugh this
Yeah.
morning. Like Termination Day is like, what does he mean?
Mhm.
He was talking about terminating jobs because of the tariffs. so,
Yes, yes.
which is really both sides are. I mean, I don't think liberation's necessarily the right term. I don't think termination's right either, though, for the tariff announcement.
But Q1 is officially done. And I don't know about you guys, but to me, it feels like we've lived a whole year in the last 3 months, at least with market volatility and news flow and just all the crap going around.
Yeah,
Same
Yeah.
or
It
no?
feels like a very long quarter.
yeah. No, obviously, been doing a long time. It's yes and no. It's 3 months. I think it's the news cycle.
Yeah.
I think everything always seems longer because it's in the news. So obviously, Liberation Day is around tariffs.
Yep.
Mhm.
So tariffs have been in the news certainly since the
January.
election. Yeah, January. So it's 3 solid months, but it does seem like a year because there's so many twists and turns. It's like watching a movie or a car accident. Depends how you want to look
Yeah.
at things. It's and I think it's in part because the media likes to. We've talked about this in other segments.
Yeah.
They overhype things.
Yep.
To give them something to talk about, and this is certainly something to talk about.
Yeah.
Right. I
So-
mean, like DeepSeek, for example, that seems like 10 years ago.
Yeah.
No one is talking about this anymore. No one
January.
is remembering that anymore. It's like it seems like we're way back there.
Mhm.
That was like in 23. We got to like July and everybody had forgotten about the 3 banks going under.
3 banks. Remember the big recession call end of
Yeah.
2022 into 2023. Everybody just like, okay,
Yeah.
Okay. whatever.
just move on.
All right. So sports players, we're getting a little thin on these. I don't know if we may have to transition gears here, especially once we get over 99.
Yeah.
But I went with Dennis Smith, 6-time Pro Bowler, safety for the Denver Broncos. He didn't ring a bell for me,
Doesn't
but
do much for me.
But then I was talking to Mitch, our audio engineer from Luson Media, and he was like, why don't you just do the 49ers?
That's what I was.
Mm.
He stole my thunder. That's what I went. Well, why wouldn't you just go?
I was thinking
Mhm.
jerseys and players, and I wasn't even thinking like
Mhm.
teams.
I actually did a little Lisa research too, or just kind of like, oh, what's interesting about 49? It's a square of 7, so
Yeah.
7 times 7, so
Square of 7.
something.
Yeah.
right?
I mean, there's
Great fun fact.
Yeah,
Keith.
that was
Thanks.
a Lisa fun fact for you.
And then lastly, before we get into our hot button podcast, we've almost been doing it for a year. April 17th last year was when we
Wow.
recorded our first episode.
Was that our Liberation Day?
Yeah, I guess
That
so.
was all Liberation
I guess
Day.
so. We're gonna do anything fun for 1 year.
We'll see. We haven't made it there yet. If we still
Yeah.
could be canceled.
We have
Yeah, we'll
to-
see. All right. So hot button, Liberation Day. I don't want to talk about it too much just because we don't have a lot of details, because even though the tariffs were supposed to go into effect today, they're not being announced until 3 p.m. Central Time, 4 p.m. Eastern Time. So I'm a little confused on that. I would have thought that they would have come out last night or this morning, not let's wait until the day is basically over.
Yeah, I saw that too, and I'm like, is that because the markets are closed? It's to your point.
It's weird.
Everybody assumed, even the investor base, I think everybody's expecting an announcement like pre-market,
Yeah.
and it's not till market closes.
Well, so I was supposed to be on Yahoo Finance yesterday, and they pushed me today because they were going to be doing tariff stuff.
Were you on already?
Yeah, this morning I was.
Nice.
But so I think they were expecting
Mhm.
for an announcement to come at some point, and so they bumped me today, and then
Still not there.
Still not there.
So what did you talk about? Just the potential tariffs?
We talked about tariffs, how we're navigating.
That's the problem we have. I mean, even today, us
Mhm.
talking about it, we don't know.
Yeah,
We know
right.
there's a lot of
It's so tough because it's like a shot in
volatility.
the dark, basically. What you say is like probably not true by 4 p.m. Eastern anymore, right? And
Yeah.
changes and I don't know.
Lisa, you're probably the most read on it. What do you have you what's happened recently, and then kind of any speculation? You got any thoughts?
I mean, I think investors are waiting for a little bit more clarification, obviously, and more certainty, which we saw kind of that uncertainty got a pretty bump in the market and in investor sentiment. I don't think we get necessarily uncertainty with today because there's still then the question. So we get numbers today, which is good. So we can do something with the numbers
Yeah.
then, and what countries actually are involved. And then we can do our calculations, what it means and all of that. But then it is still not sure how long this will stay. It is still not sure if countries can renegotiate. I mean, it didn't seem like there was a whole lot of negotiation so far.
Well, it's interesting you say that because the blanking on his name.
The Ford.
Yeah,
from the
Doug
Premier, yeah.
Ford. Today he was on CNBC during an interview, and he literally said, if Trump were to drop the tariffs, we would get rid of all of our tariffs on U.S., even the ones that have been long standing.
Yeah.
I was
That
like,
was
so what is it?
interesting.
What are we trying to get out of these?
I think that's what eventually will happen on some of them. I think what, good or bad, this tariff talk has brought to light how other countries have been putting tariffs on our products that we export. And I watched that same interview, and one of the interviewers asked, "Well, why you have these tariffs on already?" It's like, so I do think that could be the best outcome, right? Where instead of everybody ratcheting up the tariffs, maybe the tariffs that were in place go away.
But he was like,
For
we've
some of
already
them.
brought that up to Trump. So I'm just sorry, I didn't want to cut you off,
No,
Lisa.
no,
So
that's fine.
I'm just so confused on
Yeah.
No, I mean that's
the tactic
that's
here.
part of the market, right?
And I mean, like I said, I think we are confused. Like everyone is confused, right? And I think what investors are trying to gain from today is more clarity. But I think that will not happen.
I don't either.
So it's like, and then there were a lot of talks on CNBC and on some news outlets. Hey, when we get some clarity today, how is the market reacting and positively and whatnot? And I was like, there's not much more certainty today. It's just another layer of complexity. That's what happens, I
Yeah.
think. But I don't know if that gives some. I don't know.
It could be one of the bigger announcement days, right? So I think it's going to be a
Right.
bigger
Yeah.
Or more at once, at least.
More at
or
once,
more
right,
clarity,
versus-
at least on some numbers.
So I think that's where that approach is.
I follow a trader that works at the NYSE, and he always posts videos daily about different things that happen. And he brought up an interesting point where yesterday market opened up significantly down. I shouldn't say significantly, but it opened up down.
Mhm.
Intraday reversal in the morning, and then reversal back, tested the lows again, or close to the lows, and then reversed higher and finished positive for the day.
That was quite interesting.
And we're seeing the same thing today. And he was saying that he's seeing a lot of volume come into the market. And he thinks institutional investors are picking their spots. And it's actually a positive sign to see those kinds of intraday reversals. And so he thinks despite whatever happens today, the market is probably
relieved that at some
Yes,
point we have
yeah.
some more clarity or
Yeah.
some more information at
Yeah.
least, because that's what's lacking as
Yeah.
well, right? Is information.
Yeah.
at-
So
I had this. I told advisor this morning that without seeing those stats, the exact same thing. That when you start seeing markets kind of sell off in the morning and come back in the afternoon, that's generally a very encouraging. Forget the tariffs, forget what else is going on. That's usually very kind of bullish.
yeah.
Not bottom. I don't think we've sold. I mean, we sold off 10% of correction. I mean, it feels painful, but in reality, we're up 60% the 2 previous years.
Yeah.
So it really hasn't been horrible.
Yeah.
If you take a step back, I just think that action, and that's interesting that you saw that video or those stats, because I do think that's an encouraging sign. So it's been like that for the last few days, where the market kind of sells off or kind of really nervous, and all of a sudden, like, okay, maybe some institutional buyers are stepping in, like I said, picking their spots.
Yeah. So I've heard a few rumors on what the potential tariffs could be. Have you guys heard any? So the ones that I've heard is 20% across the board on all imports.
I wouldn't like that personally.
Yeah.
And then the other one that
the market.
I also heard like across the boards, no matter what country, just slap it on, basically.
And then the other one I've heard is a varying degree of tariffs, with the most egregious trade partners of ours receiving the highest tariff.
Yeah, the 20% across the board, I think, would be net negative for the market. I think the one that's most easily understandable and defendable is reciprocal tariffs. Truly, again, now some countries have VATs and things like that, so it's hard to parse out.
Yeah.
But if they're charging, Germany's charging 10-15% on our auto exports, maybe we should charge 10-15% on their imports on their autos. To me, that made logical sense. And then if you do that, maybe at the end of the day, you both say, well, we're net even, so let's get rid of the tariffs.
Yeah,
maybe that's the ultimate
the
longer
ultimate
term
goal, that to get rid of it.
just more free,
Yeah.
total free competition, free trading again. But we'll see. That's the best case scenario.
Yeah. So I don't want to talk about this too much, so I would rather move on. We'll find out more.
Stay tuned. Huh?
Actually, one more.
Lisa will let us know.
One more question for you. So Doug Ford said they would remove all the tariffs if whatever. So your best educated guess, is it most likely we see carve-outs of certain products and keep the umbrella tariff? Do they go away completely, or do we keep them entirely?
Go ahead, Lisa.
I think maybe we see some broad introduction today, or some numbers, and then as we move forward, we see some carve-outs again. I don't know what the ultimate goal here is, actually, so no tariffs on both sides would be
that's a sad statement.
the easiest, but I don't know what the end goal is here, or when it is, when the goal is reached, right, and what happens then. But I think it will be more general today, and then carve-outs as we move forward, or as we see some impacts coming in and rolling in Q2, and maybe some negative impacts, and then some adjustments down the road based on the impact of the economy overall.
Yeah, I think the goal ultimately, I think Trump's biggest problem is our trade imbalance, right?
Yeah.
We export a lot less than we import. Obviously, we're a consumer nation, so that's always going to be the case, but the magnitude is pretty.
So we probably resolved that, not
so I think
overnight.
that's the goal of the tariffs. Now I think there's going to be some kind of reciprocal tariff or some kind of blanket. Hopefully it's not that 20%, and then it's going to be carve-outs galore, I think, because there's certain industries we just can't, even if we wanted to create here, we can't, or it'll take too long. So I think those get carved out.
So right away, you think, or
I
as we
think
move?
so. Like the auto one, right? And then the Mexico-Canada thing, I think there was like a little bit of a carve out there, but there won't be as much as probably investors want to see as carve outs are. I do think ultimately that we're going to hear this noise for. It's not going to be ever today. It's going to be multi-years, unfortunately. So
I wonder if they'll do like a poll or survey of industries and see, majority, if a majority wants to keep or get rid of tariffs. Because I saw some article on like the shrimp fishermen here in the U.S. were super excited about tariffs, right? Like, because it raises prices of abroad shrimp and keeps them competitive. So I wonder if there'll be like little pockets like that where they'll keep tariffs on certain areas where the industry average.
But is that really
enjoys the tariffs.
I mean, taking the example of the shrimps now, is that really making that much of a difference overall, and what they all trade imbalance overall? Like, what is kind of where we should move more to a balanced?
I think if you add all those little things, it eventually could help. I mean, there's so many examples that's when you hear tariffs, everybody's super negative. It's not all negative. And there's some positive that come out of it. Like, for example, if we do tariffs, one of the things I heard that Georgia farmers, for their produce they produce, said, great. That's less competition. We can get better prices. That's good for their jobs. So that's good.
Yeah, because you might have the Chinese government subsidizing farming of that specific product to make it that much cheaper for them to import it or export it to over here, and our guys can't keep up.
Yeah, and the other one, just example, north of there is where a lot of furniture is made. They said tariffs. So Georgia, they said good for the farmers there. North Carolina furnitures, they import a lot of walnut, I guess, from Brazil. They said that's going to hurt them. So it's
Mhm.
like, are your costs going to go up as a consumer, right? So I think
Yeah.
there's
Mhm.
so many puts and takes. Oh, the shrimp
Yeah.
would be
But can you
good.
really be like that much in depth, like as a president, having so much
Staff-
on the plate,
staff.
and are you, is it like really like being able to kind of be that deep into an industry and kind of do it
But
on that granular basis?
there'll be staff, and it'll be the bigger industries at first, right?
Yeah.
Your
Mhm.
autos, your oils,
How-
right? Some big
How
impact
mad
to the
would you be if
consumer.
you were one of those people that went out and bought a new car? Maybe you were thinking about buying the car, and then you were like, "Well, screw it. Its price is probably going to go up 15 grand because of these tariffs." So you go out and you buy it, and then all of a sudden they take the tariffs off. Oh,
Yeah, no, that could be part of it, right? So you, you just don't know, because you saw. I mean, people are speculating that there's been a lot of car buying the last couple
Yeah.
weeks.
Mhm.
And that's part of rolling the dice, right?
That'd be
Yeah,
pretty
nobody
funny.
knows, right?
Well,
It's
that's
like
why Lisa bought. Her husband
God.
got this big truck. I'm sure that was part was because of
Yeah.
tariffs, huh?
All right, enough about tariffs and Liberation Day. I'm sure we'll be talking about it plenty
I'm sure.
next week or the following week. So I'm going to introduce a new segment. Let's review. So my let's review segment is let's do a Q1 recap. So there's plenty of interesting things that happened in Q1. New president, new administration. We had DeepSeek, which Lisa, we all
Yeah.
have seemingly forgot about. And then tariffs. So it's been eventful. And I would say, and I think you guys would agree, feel free to disagree if you don't, but the market seemed pretty excited when Trump was elected, right? We had that run up ahead
Mhm.
of the election as the polls were showing, or the betting odds were
Yep.
showing that he was going to win, and then he wins. And then all of a sudden now he's implementing his plan that he ran on, and market doesn't seem to like it too much. So S&P's down 4.3 through the first quarter. NASDAQ's down 9.5, Dow Jones down 1.3, but bonds up 2.8 and gold is up 19, which kind of shows you
That's
the
the
risk off.
sticker shock in that group.
So there's a lot of stuff going on. Do you guys foresee anything else that would make the market turn around, as far as whether it's political policies, just something that gets the market turned around, whether maybe tax cuts, I don't know, deregulation? Does that actually start to happen? Anything that you guys foresee on the horizon for the
I
rest
think
of
that
this
was
year?
part of the frenzy, right? When Trump got elected, like the lighter regulation,
Mhm.
lighter bank regulations, lighter regulations on M&A activity and mergers, which should kind of put a spark to that. Businesses like lighter regulations, generally speaking. But Trump ran his campaign on tariffs as well.
Mhm.
But at some point, everyone was ignoring that, right? Now he's doing that, and now it's like, oh no, we want we want less regulations. We don't want that, right? So it's interesting that,
Yeah.
but I think that investors didn't see the tariff thing all that big that it is now. I
Yeah.
think that was the reason they kind of put more weight on the less regulations.
Yeah.
I got I agree with everything you guys said. A slightly different take is, I think the markets oftentimes look for reasons to sell off after big moves. And I think Trump, just like a coach in a sports team, probably gets too much credit or too much blame on what's going on. So obviously the tariffs is noisy, but I think that ultimately goes away. But markets are up 60% in 2 years.
Mhm.
We got a pullback, and we're down 4% year to date, and everybody's
Freaking out.
the news cycle makes it sound like we're
Yeah.
down 25. It
Yeah.
almost feels like we're
Yeah.
in that COVID timeframe where the markets are down 35% in a matter of 5 weeks.
Yeah.
This headlines makes you almost feel that same kind of awful feeling. And then
Yeah.
it's like you look at the numbers, it's like, okay, down 4%, we're up 60. Again, it's we always talk about, even before the election, whoever got elected, it's like markets do a thing regardless of who's in the office. Now, obviously, there's more noise with tariffs.
Yeah, short term. Mhm.
I do think, if I was advising him, I would have gone to the tax cut policy first, get some goodwill.
Mhm. And
Everybody,
then kinda
everybody
get
likes
that
just
in,
kind
yeah.
of
Mhm.
status quo taxes. You don't want taxes to go up, generally speaking. Unless you guys can feel free to write IRS
No.
more if you like.
I'm
But
good.
so I think that's part of it. You're in right, but there's a fear
Mhm.
factor because gold's up 19%. So
Yeah.
something is going on
Mhm.
for gold to be up 19%.
And
I
it
mean,
also has something
Hasn't
to
gold outperformed the S&P over the last 3 years?
Yeah, because last year
Mhm.
was 20 something, I think.
gold
as well.
had the best quarter since 1986.
Wow, it's so
So
that's a little scary. So right,
Yeah.
anytime to my point of market's been up 60% in 2 years.
Mhm.
Now gold last year, I think it was
Yeah.
20-ish%, and then
Yeah.
20% in a quarter
Yeah.
or 19.
So is it fair to say that because of the performance of the markets over the last few years and the valuations that we faced in the S&P, which is also expensive and
Yep.
high, right? Kind of that a little bit of uncertainty is kind of
Yeah, markets
mean,
look
yeah.
for reasons to sell off,
right.
and this
Yeah,
is
and that
the
was
one.
kind of overdue. Or
We didn't know what the catalyst was coming into the year, but this is the
Yeah.
catalyst.
This is
So we also got full year 2024 earnings. Did we learn anything that we didn't already know from maybe the stocks that we hold, just market in general? Any thoughts on that?
I think going back to DeepSeek again, I do not want to make a big thing of
No.
it because everyone forgot about it. But I think, which was interesting, and all eyes was generally on the Mag 7 because they have such a big weight in the S&P. And then DeepSeek got out like a few days before some of the Mag 7 names reported, and everyone was, oh my God, this is the end of US AI and tech leadership. So that was very interesting, and even more pressure on them, like what their commentary is and all of that, which I think was very positive in the end. So I was positively surprised how they dealt with it and their commentary and all of that, and they see it as a net positive going forward, while still continue to innovate and kind of keep spending, which was also positive for the chip makers and all of that, which I think was a big theme.
Mhm.
And also what we saw, and that's, I don't know how many quarters after that, but what we saw with the last quarters as well is like companies that positively surprised got not as much investor love as they historically get when
Yep.
they're positively kind of exceed their numbers. But on the other hand, companies that missed their earnings got punished way harder than what
Yeah.
history suggests. Which again, I don't know how long how many quarters we're actually seeing this, but it's a couple of quarters now with this trend.
Yep.
Yeah, no, that's right. I mean, as far as earnings went, I think going into this year, the forecast was for 15% EPS growth, the S&P 500. We've been all over saying 15% was way too high. Numbers now have settled down around 11. My guess is it's still probably a little too high, but certainly a little more realistic. I think earnings of South were fine.
Yeah.
Probably a little bit more, as you got reported later on with maybe some of the tariff stuff, the DeepSeek stuff. I think guidance is probably maybe a little more cautious.
Yeah.
So
Yeah, I mean,
that
you saw a
contributed.
lot of companies. I can't remember how many companies it was specifically, but I think it was over 200 of the S&P 500 companies mentioned concerns about tariffs.
Yeah.
And uncertainty was,
And
I
so
think, another big word.
I think the guidance was probably,
Mhm.
I mean, and rightfully so. You don't want to give a great
Bullet,
outlook when, especially when a lot of products that you import is probably from these countries. So
Do you think now that we're a few weeks away from Q1 earnings, do you think that the mention of tariffs is going to be more or less?
way more?
Exactly. So I think it'll be interesting. This will be obviously it's Liberation Day, so we'll see what comes out there. But I think the next move for the market actually focus
Is
on back on the
actual
fun.
numbers.
Yeah, focus on fundamentals will be the corporate numbers and the actual commentary, not just the numbers, but the commentary out of management.
But I
teams.
think that helps, right? Because Q2 will be kind of the quarter where we see the impact of tariffs or see actual companies being a little bit more prepared or knowing more. We actually see it in the consumer sentiment and in GDP growth and all of that. So we actually have numbers and not just forecasts and not just, I don't know, guidances from wherever. I think that is a relief in it itself that we actually see some real impacts.
Yeah, I mean, not every company gives you quarterly guidance. They'll give you updated annual guidance, and maybe they keep it steady. But what I'll be more curious in is the companies that give you the quarter guidance and what those estimates or numbers look like, because they're gonna have the first couple of weeks before their report where they're gonna be able to quantify and figure out how big of an impact these tariffs are going to have on the products that they're importing. And so we'll get a lot more clear guidance on a company by company basis in this upcoming
Yeah.
earnings season.
I'm looking
So-
forward to hearing that versus
Because then you can actually quantify
Yes.
what the impact on the stock is going to be versus what's happening right now. It's all just a guessing game because nobody knows. Because like the USMCA stuff, you don't know what products of the companies and how big of an impact that's going to have.
that's
because
the
of the
old NAFTA agreement.
exemptions.
So for
Yeah. Or
those-
like some of these exemptions that companies got for the last 30, 60 days, whatever it is. Now they'll be able to actually quantify. And so for us, it'll help us make those decisions.
yeah, so you can actually decide based on numbers how
Yeah.
good or bad these
Yeah.
tariffs and company earnings and things like that are actually going to be.
Yeah. So S&P hit a correction in Q1. The highs were on February 19th. A couple of weeks ago, we crossed over that minus 10% by like 3 basis points or something.
Yeah, for one day, right?
Yeah, for one day. So I think we talked about this a couple segments ago, but the median drawdown for the S&P 500 from the highs in any given year is 10%. The average is almost 14%. So this is normal. This isn't, and last year was 9%. The year before that was 8%. Like we're right where we were last year. We're down 9% right now from the highs. Like it's not this catastrophe. So my question to you guys is, where do we go from here? And what are we doing in GI?
I'm still the camp we talked about before the year that we expect more of a normalized year, which is that 8 to 10%. We're down year to date 4% in the S&P. I'm still in the camp of we can get to that 8 to 10% once we get some of this noisiness behind us. Now, again, earnings reports in 2 weeks. If they're a lot more bearish, then we'll have to adjust where we think the markets are going. So that's kind of where I'm at. I think the key drivers obviously is earnings growth. That's at 11, even goes to 9. I think that's fine. If it goes to 4 or 5, that's not. Unemployment's at 4 or 1. That stays there. Consumers have money they love to spend. That keeps the economy going. But if unemployment starts ticking up towards 5%, that's something. So GI is monitoring all this stuff, and we're making changes in our portfolios. Like there's some opportunities, I think, on some of these stock pullbacks. I think there's some opportunities to buy, and there's other names that I'm a little more worried about. So
yeah. Lisa?
I agree with Keith.
Yeah.
I just wanted to say, because like Keith mentioned earlier, we hear a lot of in social media and kind of media generally dramatizing it
no, for sure.
a lot. And it feels more like, oh my God, we are 25% down sometimes, which is actually just 4, like on a year-to-date basis. And I would say, hey, from the last 48 corrections that we saw since World War II, we saw 48 corrections. Only 25% ended in a bear market, which means we would need to drop another 10% to minus 20% return that we enter bear market. So most of the time, it's just a normal process, and right, without completely escalating into a bear market. And despite what we hear all day, every day, when something like that happens, it does not happen that regularly. Can it happen? For sure.
Yep.
But I just think we need some more. I think tariffs alone will not be. So the tariffs uncertainty alone will not be enough to get us down another 10 more percent. I think economy is still in a good shape, resilient. And there's some cracks here and there which can extend. Then it can be possible for sure, another shoe to drop that investors do not see yet coming. But I think overall, we're in a pretty good shape, right?
Yeah. Yeah, I generally agree. I'm a little bit lower than Keith on the final year end. I'm more in the 6 to 8, so not a
Still
big difference.
positive, though,
Yeah.
right?
So
I mean,
I still think this is a good buying opportunity. Could we see some more downside? Sure. I think the volatility remains this year. I think we're going to continue to see this choppiness and uncertainty. And there's going to be never-ending news flow when Trump is in office. So we're going to have to deal with that in the markets for the next 3.5 years now, 4 years, I guess, still. But I mean, if we look at the economy in general, I would say we're still doing fine. There's some areas of weakness that are starting to pop up, especially on the consumer side. But I mean, unemployment 4.1%, well below the long-term average of 5.8, and the median of like 5.3. GDP growth for Q1 2.3, or Q4 of last year 2.3%. It was revised up a little bit in this last week, but where the ouch comes in is Atlanta Fed is now projecting minus 3.7% GDP growth for Q1 of this year. So some weakness there. And inflation 2.8, core 3.1, not bad. Retail sales 0.2% month over month, but that was off of a back of minus 1.2% in January. So consumers are certainly, and I don't know if it's they spent a lot last year and they're just kind of pulling back a little bit right now, or if people are actually paying attention to tariffs and concerned about spending. I just don't. That's where I'm struggling.
Yeah.
Mm.
Oh,
But the
okay.
savings rate increased again.
Yeah.
Which is a positive
Yep.
sign.
Yeah. And we'll get
It's
updated
definitely
on
a mixed bag of good and bad.
Yeah, and we'll get updated on employment here on Friday as well. With I think what I'll be looking at is not only the unemployment but the wage year-over-year wage growth. It's supposed to be 4%, which is obviously well above inflation, which is good, which is great. So, all that being said, a lot of things going on.
Yeah, he sums it up well.
So, with that, I think we'll leave that there.
Yeah.
So next time, I'm sure we're going to be talking about tariffs next week. So
Stay tuned.
Stay
Again.
tuned for that. And I guess we'll see you all next week.